What's up, guys? It's the last weekend in April. I'm going to try and kick off what I hope to be a consistent project of mine, highlighting one of my favorite trades from the week. So, without further ado, here is a Tesla trade from Friday 29th, just yesterday. It's an inverse correlation trade. It's one of my favorite setups. So, let's check it out. Let me know if you have any questions in the thread below. Thanks so much. See you.
Trade review for Friday, April 29th. Some days you are the window, some days you are the bug. Today I was the window. Totally traded in the zone today. I felt great. First time in a while. Um, Check futures. In the morning, we had the bounce from yesterday afternoon, setting an overnight high, and then pulling back into the morning. This is SPY on the left and Nasdaq on the right. So the same thing on Nasdaq, a little bit stronger as we were not close to testing the overnight low. Um, with SPY, we were testing it and actually broke it. So this is how we looked in the morning. So I was thinking, okay, logically, I think we're going to be looking for a support play in the morning. I'm going to want a support play on QQQ or potentially Tesla due to Elon selling. That we could see some bull correlation if we see some strength in NAS because we're approaching support. I like a support play. Even though bigger picture, of course, we are looking for the daily lower high still. Even if we are bearish and want to look for the daily lower high, we still need most likely the hourly lower high, probably against overnight high or maybe like a 4-hour resistance test of the high day yesterday to top fish. So, anyways, looking bull nonetheless. On the opening play, I had set this pre-market level. This is the opening candle. So off of this level, we had a little 5-minute bounce, and I thought, okay, well, we will if we back test this level, this yellow line, I will fish that line for potential support play to get the bounce started. Let me show you QQQ as well. QQQ here, let me go full screen so it's a bit more clear. Had a nice inverse head and shoulder setup. So we had here, and we were looking for this right shoulder. Um, as we were pulling back to this yellow line. This is a similar level. I'm not sure if it's exactly the same as that yellow line on NAS with the pre-market level. For sense of the pre-market level, I guess it was, but I just mean like for it to line up perfectly with this past 4-hour left shoulder of the inverse head and shoulders setup from the 25th. So anyways, it was a level that I played off of on QQQ. On this first 5-minute candle, we saw this pullback. I fished this level. We bear broke with no follow through. So it stopped me out initially. I guess stop was too tight, but that's all good. When I saw the stop out, I was watching Tesla because I have these split screen like this. When I observed Tesla, let's go to Tesla setup. Tesla, we had this nice tight hourly range. These yellow lines here are some resistances from the last couple of days that will come into play in a minute. But we're testing, pulling back here into the open, and we're looking for this hourly higher low type setup. From the pre-market level, if we throw on pre-market extended, we have this pre-market support that I wanted to fish long off of. If you look at the pre-market support for QQQ, let's throw on extended as well. This is the pre-market level for QQQ. We broke below it. If you look at Tesla, we didn't. We didn't even come close. I was actually playing this first level, 887. I fished long off of that level. After let's talk risk off this first play. This is one of my favorite setups. When we have these overnight high and low within the high and low a day prior, it's a really nice range day. So I like those levels are super reactive, including the pre-market level. So this is one of my favorite playbook trades. So I was pretty aggressive on it. I had a half-day risk, stopped out, half-day loser. Didn't phase me. The only thing I like better than clear support play, and the only thing I'm probably more profitable in is the inverse correlation trades. I talk about this all the time. I had another trade earlier this week on it. This is an inverse correlation trade. I was expecting if we did see a bear break of this level, because we're in such a range heavy day, you expect bear breaks or bull breaks with no follow through. Here, when we immediately saw that level rebid after breaking, same thing on NAS futures. That's when I had the opportunity and kind of the trigger, really split second, to be super aggressive with my scales here. So I grabbed just over a half day loser. I guess it was like a 3/4 day loser if I was to stop out in this trade. So let's call it 3 positions. On the initial bounce up into this level, I took off. I think it was just over 900. My average was somewhere in the 93s, I think, into the break of 900s, around 901. I took off third, so it immediately eliminated the majority of my risk. I don't like selling half because it really destroys my profit and makes you have to have a huge move to have 2 or 3 risk to reward or better. So I just took a third. On the pump into these 2 levels, I took off another third, albeit a bit too early. Most of it was around into and around this 910 level. And that's why I had 1/3 position remaining. When I saw this test and rejection of these levels, even with we still had a nice strong bull correlation to QQQ, which at this time, was bouncing, but really just looking for a 5-minute lower high. I took half of the remaining third. So I only have a 1/6 core position left. That's cool. Then we saw some really nice consolidation on QQQ. Bears were still in full control. We had not yet changed the 5-minute trend. So we need to be cautious. So it was totally cool with having 1/6. Stop still down here, thinking we're going to at least have a 2-minute higher low to move our stop up, potentially maybe even a 5-minute higher low. We had that. QQQ had this 5-minute consolidation, and this is another trade opportunity. We had a 5-minute higher low through VWAP and started pulling back. If you look at Tesla, it was much shallower, and on the 2-minute, it was even more clear of a place to add safely. So we had this as the initial pump, pull back on the 2-minute, and then the 2-minute lower high, if you will. I moved my stop up. That was a way to protect myself on the 1/6 core. Then we saw this little 2-minute higher low. When we saw this 2-minute higher low, QQQ was still looking for the 5-minute higher low, but really wasn't getting any follow through for bears to test and break through low a day. So I re-added a small position on this 2-minute higher low versus this 2-minute level. It was a tiny risk and allowed us to size back up a little bit on that core position. Then as soon as we started to see the bounce, I took that position off back just over the 910 level for a really nice flip, still holding the 1/6 core. Reason holding the 1/6 core is we because we have a bull correlation, because we have a nice hourly setup, because we have the 4-hour inverse head and shoulder setup on QQQ at the time. Of course, now it's a little bit weaker. We wanted to give it the full opportunity to run especially because we have a low amount of resistance up here on the hourly in Tesla. As we broke through this level, I held. Maybe could have added a scalp for a breakout trade, but I didn't. Didn't want to be. I just generally I hate breakout trades. I find them tough to manage. So this was a play out or stop out position on the 1/6 core, or as you'll hear a lot of SMB traders say, I need a reason to sell this trade. I refuse to give up on this trade unless I have a reason to sell. Given the clarity on the 15-minute, on the daily, the hourly, etc., I did not want to be just holding it under the 2-minute higher low. I thought a 5-minute higher low gives it a little bit more breathing room and it will allow the trade to mature if we can see simple continuation on QQQ. We didn't, and I posted this in general. This overnight level, this is the overnight high on NAS. We rejected from it beautifully. Again, bull break, no follow through. Just as I mentioned earlier, we pulled back, had the 5-minute wick higher, and then dump. That immediately signals that bears are more in control than we would think. If not, we would have set this 5-minute higher low, break above this overnight high, and then continue to test the next key level, high a day yesterday. We didn't. So when we saw that break, or on that 5-minute wick, pardon me, I moved my stop up on Tesla, and that stopped me out. So overall, I think it was a 3.5-day maker. So really happy with the trade, even more happy with holding that core 1/6 position. Typically, this is one of my biggest faults as a trader, is not leaving a core as a runner. I know a lot of people struggle with that. Another thing I realized is that final core position, whether it be a 1/3 or 1/6, it has basically nothing to do with your P&L. The first one third is about your risk, is about minimizing your risk on the trade in case it rejects and fails. The second third position is about initial harvesting of profit at a key level. That way you lock in, maybe a half day maker, maybe a day maker, maybe more. In my case, it was significantly more on that first trade, about a 2 day maker. I wanted to lock in a good chunk. And then on the final core, the final one third or one sixth, whatever you're holding, it needs to have a clear reason to sell. So either it's approaching a more mature, advanced price level, or you're losing key trends, or perhaps something key on a market leader like the NASDAQ ETF is also occurring. That's something I'm going to be working with going forward. So if you have any questions, just let me know in the thread below. This one's a little bit longer, but I think it was pretty clear. So yeah, let me know if you have any questions. Talk to you. See ya. Have a good weekend. Peace.